Welcome to Talk Tickers, where today we're breaking down one of the most explosive earnings reactions of the entire season, Arrowhead Pharmaceuticals. After their latest numbers dropped, the stock didn't just climb, it feels like it was fundamentally re-rated by the market. We're going to dig into exactly why. Okay, let's just cut right to the chase. Forget all the noise for a second because this one number tells the whole story. A massive 23.3% rally in a single trading session right after the call. I mean, the market didn't just like these results, it was absolutely electrified by them. So how in the world does a biotech stock do that overnight? Well, we're going to unpack it for you. First, we'll look at the staggering numbers that just blew away all expectations. Then we'll cover the company's huge leap from the lab to the pharmacy. After that, we'll check out their fortress of a balance sheet, see what the market's final verdict was, and then we'll give you our take on what the next earnings call might hold. All right, first up, the headline numbers. And let me be clear, this wasn't just a beat. This was a complete and total dismantling of Wall Street's expectations. It all started with the top and bottom lines. The sheer scale of this outperformance is really what you need to focus on. Revenue didn't just squeak by the consensus, it absolutely crushed it by 43%. And at the exact same time, the company's loss per share was nearly chopped in half compared to what everyone was expecting. Look, this wasn't some minor error in forecasting by analysts. This was a massive signal that the market's entire model for Arrowhead was just plain wrong. And if you zoom out and look at the full fiscal year, the story gets even more dramatic. Revenue clocked in at an incredible $829.4 million. To really put that into perspective for you, that's a 23,000% increase year over year. Now, this isn't from selling product just yet. This is high-value, non-dilutive capital coming in from major partnership deals. It's a huge vote of confidence from some really sophisticated players. And it means Arrowhead can fund its own growth without hurting existing shareholders. That's key. This slide right here, this captures the entire financial turnaround in a nutshell. The company swung from losing $5 a share in 2024 to basically reaching the break-even point for the entire fiscal year of 2025. I mean, that is just a stunning and incredibly rapid operational shift. But you know, the market wasn't just cheering about the money. This quarter marked a crucial inflection point. Arrowhead officially graduated from being a promising clinical stage story to a full-fledged, real-deal commercial company. And the centerpiece of all of this is REDEMPLO, their newly FDA-approved drug. This is a best-in-class siRNA therapeutic for a very rare genetic disease. And its approval is a massive de-risking event. Why? Because it proves their entire RNAi platform can go all the way from a concept in a lab to a product on the pharmacy shelf. Now, the initial market for this first approval is pretty small, but that's not the whole story, not by a long shot. Management laid out a clear and aggressive timeline to expand REDEMPLO's use into much, much larger patient populations. You can see it here. Key data readouts and a new FDA submission are already on the calendar for next year, which signals a major ramp-up is coming. Okay, so a new drug is great, but what really amplified the market's reaction, what really poured gasoline on the fire, was the realization that Arrowhead is now funded for years of growth, and it's got a pipeline packed with major catalysts. Just look at where that revenue came from. We're talking hundreds of millions in milestone and upfront payments from blue-chip pharma partners like Sarepta and Novartis. This is what we call smart money, and it's validating the underlying science in a huge way. And the result of all that cash? A runway. A cash runway that extends well into fiscal 2028. That means they can fund all of their ambitious plans without having to go back to the market and dilute shareholders. In the biotech world, let me tell you, that is a massive, massive luxury. And that cash is fueling a pipeline that's targeting some of the biggest markets in all of medicine. We're talking cardiovascular disease, Alzheimer's, and yes, obesity. Now, management did slightly shift the timing for their early obesity data to January 2026, but really, that just puts a firm date on what could be the company's next major home run catalyst. So, with a blowout quarter, a brand new drug, and a fortress for a balance sheet, how did the market react? Well, it didn't just meet expectations, it completely shattered them. This chart just says it all. The options market, which is often seen as the smart money, was pricing in a big move of about 16.5%, but the stock just rocketed right past that. This is what happens when news is so good, it outstrips even the most bullish bets out there. And the narrative after the call was just universally positive. The key words you saw everywhere were transformational and de-risking. It felt like the street finally saw all the pieces coming together: the financial strength, the platform validation, and now, finally, the commercial execution. So, where do we go from here? The story has officially moved on from this past quarter. Now it is all about the future. So here's our take on what to watch for in Q1 and beyond. The whole narrative is going to pivot, and it's going to pivot hard. It's no longer about recognizing collaboration revenue from the past, it's about the future. All eyes are going to be on the initial prescription numbers for REDEMPLO and, critically, what obesity data set that's scheduled to drop in early January. We believe the stock still has room to run. The next major leg up is going to be entirely dependent on that obesity data. A positive result there, something that shows competitive data, could easily propel the stock right through its recent multi-year highs. And for that reason, our rating is simple: outperform. Arrowhead has methodically checked every single box. They've de-risked their financials, validated their platform, and now they've proven they can execute commercially. At this point, that deep pipeline represents pure, unadulterated upside potential. So, if we're pitching this as a trade idea, the catalyst is obvious: that early January obesity data. The thesis is that even after a 23% pop on earnings, the market is still underappreciating the potential for another big positive surprise. The way to play that could be through call options to try and capture that near-term explosive potential, but you have to understand that you're paying a premium for that volatility. And as always, just a reminder, this is for informational purposes only. It is not financial advice. Please be sure to do your own research. You know, this past quarter was the moment Arrowhead proved it could build the bridge from clinical promise to commercial reality. The question now is whether that bridge can actually support a multi-billion-dollar franchise. Given the war chest, the platform, and the pipeline, the market is certainly starting to bet that it can. We'll be watching.